Welcome back. Hope you had a great week. So last week, we discussed a possible retracement, down to the 382 fib. We obviously went a little lower than that, but that's all within the requirements, right, of a wave four. And also, we discussed how this was shallow. So generally, wave fours are going to be deep. So nothing surprising, right? The market so far, I also posted on Twitter, I am expecting a bounce. It was a little more weak in the Thursday, Friday than I expected, but we still had a strong reversal off of the Friday open. So, I mean, no changes, right, to what I posted and what we're talking about. My primary assumption is still that, we still have at least one more left to the upside. But even if I was bearish and not bullish, right, whether you're bullish or bearish, a bounce is expected, right? As long as 4,300 holds, I do see, even if I was bearish, I do see, the market going up to like 4,555, right? Before it goes down lower, is kind of what a bear chart would look like. So bull or bear, I do think a bounce looks likely here, right? And so far, so good. You can see that we had sort of like a indecision kind of candle, right? At the bottom of a downturn. So depends how we do today, right? If we can close strong with a bullish engulfing, that would, give you more confidence that we're likely going to hit 4,555. So that is something I am watching, right? Something that is important to be seen. Bullish or bearish, please do expect a bounce. And even on NQ, right? Remember we discussed how it was kind of lagging, kind of has to come down to that 0.23 fib. You can see that we have also come down to support. I mean, this is the contract rollover gap, right? So it was kind of an artificially created gap. That's kind of why I'm not too keen on looking for it to get filled, because that was, again, artificially created. So yeah, I mean, most of the time I've always told you that gaps do tend to fill, and those are areas of interest. But since it was a contract rollover gap, maybe not, but that is always a possibility. And I wouldn't be surprised, like it still wouldn't break the chart pattern that I am showing you. All right, so yeah, let's see how we do on Monday. And let's go to the chart of IWM, and you can see that we pretty much, right, broke uptrend, but we've come down all the way up down to support, and we bounced. So, I mean, if you are bullish, right, like me, and you expect a bounce, then you need follow through, right? A pretty nice follow through on Monday, and that would give you more higher probability. And yeah, for all the charts, right, you could just keep the low of Friday as, as a stop before you trade it. So, I mean, that's all I wanted to say. And we discussed the dollar as well, right? And you can see that we are against resistance. So as long as the dollar doesn't break over this high, right? And let's say we can give it room up to like 104.2, right? But as long as it stays below those areas, it's a risk for a little bit of sell-off at least, right? As heavy. You can see that we've not broken over this resistance line, like decisively in like 6 months. So, I mean, as long as it follows the trend, then the market should bounce, right? So yeah, we can keep an eye on the dollar, and if dollar starts to break out, then we can reverse our opinion on the equity markets. And I've shown you both the bull and bear versions, so what it does shouldn't be a surprise. And the 10-year has actually managed to hold over 4%, right? But I still, I don't know, something in my gut is just screaming that bonds may have a very repulsive bounce, but we haven't really seen it break it, right? I always said I would like to see it break this downtrend before going long bounce, and it did have a gap to fill here, right? So it did fill that gap. So yeah, let's see. I've been completely wrong about bonds so far, but I'm still watching it. It's still like, if this was bullish, I'd say it would have been a lot stronger. The candlestick patterns, none of it has really given me confidence that this is that, that bull flag breakout for the wave 5. I mean, I was expecting a wave 5 at some point. I just think we may not be there just yet. But yeah, probably wrong, right? So far I expected to move up to 4%, but I expected a rejection here, but still holding over. So yeah, I'm just watching this at this point. I'm not really trading bonds or the 10-year, but it will be interesting to see how the market moves, right? And Wix so far has just, bounced off of support back to resistance, right? So it does look at risk, and I do think that Wix kind of has to make a new low before it can have any strong bounce like it has in the past. So that again kind of lends belief to the fact that, the market does have a wave 5 left. And I've shown you charts like AMD, charts like Tesla, where I still believe that there's one more wave to the upside, right? So kind of would be, part of the thought process. Same with Google, etc. Wave 5 remaining. So yeah, let's go with this week's watch list. With that being said, the first one, again, bull or bear, I do expect to bounce off this level, right? So I have Microsoft calls over 318, right? I think 320, 325, 327 should easily be doable, right? And if I was even more bullish, right, then I have this wave 5 going higher. But yeah, for me personally, it did, right? Go to the 4-hour chart, you can see that I kind of had this 314, 313 as a basis for a bounce, and it does have a nice bounce. So it is starting to look very constructive, right, Microsoft? So that's why I have it on this week's watch list. And the next one I have is actually PDD again. Let me go to the chart of KVEP, right? You can see that we've broken the pattern. Any bounce will probably still get rejected and go down lower, right? So I think a stock that hasn't really sold off with, it has, but not as much as the rest, right, is PDD. So I do think that if it bounces and gets rejected, right, PDD below 76 should be able to come down to 70, 68, right? And possibly even down to 54. So that's why I have PDD puts on this week's watch list. The next one's actually Target. And I like Target because you can see it had that low, right, on earnings before it bounced, and that kind of satisfies that wave 5. And so this could be your 1-2. And again, I go to the daily chart of Target, you kind of be able to see that it does have an insight, almost a double insight day, right? So Target could, right, if it breaks 113, 133, please, like, it would make a very nice move to the upside. So it's definitely worth keeping an eye on. And if you're bearish, right, break below 129, right, should be able to bring it down lower. But yeah, I do think that this is more biased to the upside than it is to the downside. And if I drew another resistance line, right, you can see that kind of where resistance is. So if it breaks out, should be able to have a pretty bullish move to the upside. Now we look at J&J, right? Again, I have the reason I have puts for this is you can see this is the resistance line, right? A 1-year long downtrend resistance line. It's kind of just gone sideways 1, 2, 3, 4, 5, 6, 7, 8 days, right? So it is going to break bullishly or bearishly at some point, right? You can trade this both ways, right? Over 176, it is bullish, right? Has a lot of space to the upside. And below 172, it's likely, going to come down to 167. I am leaning bearish, but this can break either way. Just have your bull and bear triggers ready. All right, that's all I have for this week. Have a great day.